Okay, welcome. I'm Khan, and we'll start my education session about the charting of loanDepot. I haven't looked at your results, so I've tried to approach this most unbiased as possible. I will guide you through my steps, and yeah, after that I will check your results and give you individual feedback, hopefully. Okay, let's see. So loanDepot IPO'd in February. That's the reason we have a very limited chart over around 5 months. And so it's not the most complicated chart with limited supply and demand areas, but it's the first session, so I will looking for more difficult ones in the future. Usually I start in the 1 year or 5 year daily chart, and that gives me an overall overview about the ticker, about the chart, and then there I will start to edit the lines. Just to give you an example about TradingView. So I use TradingView as my normal charting tool, and you won't have that many indicators if you use the free version, which is perfectly fine. So I pay for the Pro Plus version. That's why I can use up to 9 or 8 indicators at the same time, but usually you won't need this. So I would suggest you start with the EMA combi indicator, maybe volume, maybe an RSI, and that's it for the as a starter. And make these stochastics and my squeeze monitor and the volume profile per price. Maybe it's you can use it later, or you can swap different indicator pairs. If you use the free version, that allows, I think, 3. Okay. Okay, well, so we haven't established a clear EMA 100 and 200, of course, so we can skip that. The price is at the moment below the 20 and 50 EMA. As a start, loanDepot attempted to file in for a much higher price. I think their goal was $30 plus as a baseline, and they failed to accumulate that amount of money in the beginning of the IPO. That's why you can see a harsh drop after the first few days. And if you plan to trade a post-SPAC or an IPO in general, I would always wait to start long position, well, until a few days, maybe even 1 to 2 weeks after the IPO date, because there will be a hefty sell-off. There will be a day trader who tries to start a position here, sell there, and then you won't be one of the persons that will be trapped with a long position here. As you can see, that would be a very red portfolio of yours. So I think the first goal was the first target was to support stop loss, resistance, and price target lines. So the support line is quite easy. It's around the $12 range. Correlates 12, and in that special case of loanDepot, I wouldn't go massively below that with a stop loss, because you have here a large gap from the IPO, and we'll come to the gaps later, but maximum 1180, and that's already, for my taste at least, too much. I would go with 1190 maybe as a stop loss. That said, I think around the $12 area is the price point where the institutions bought in pre-IPO. So in the case of loanDepot, that might be a very good price area where you can start a long position right now, maybe. That's one other target I gave you. Try to find good swing trade opportunities. So right now, maybe you wait how this week will play out, but I doubt that the price will fall below $12. We have now a recent dividend sell-off as usual. You can see a combined earnings and dividend sell-off, very harsh. Then it tried to recover, it failed possibly on a smaller time frame, one of the EMAs. We'll look into that later. But I think around $12 might be a very good starting position for if you want to trade. Earnings. Earnings are a bit later this year, so that might be a good opportunity. So support and stop loss. I see here a possible resistance area. So around 1420, 1430. I would always try to catch as many candle bodies as possible, not that much wicks. So let's say 1420 as a possible resistance. Can even go more conservative and take this. So the 1320 as a resistance, and maybe the 4020 as a possible price target. That way you, how much would it be? 17%. Perfect. That would be very nice. So yeah, let's keep it that way. Very simple trade. You see this price range was tested numerous times in the past few weeks to months. So very likely that the price will reach around the $14-ish area once again. And risk reward, let's see, let's assume we get in around 12, close below stop. 1 to 6, 1 to 7. That might be very good. 6, it's really nice risk reward ratio. Okay, so the next step. Just wait a minute. I have to check if my recording still works. Okay. So the next step would be possible gaps. So I would suggest you use the normal candles in TradingView, not the Heikin Ashi, not hollow, or well, maybe hollow, but use the normal candles. That way you can see gaps in the chart. With Heikin Ashi, you won't see any gaps because you have a straight line from candle to candle, and I want to see possible gaps as a swing opportunity or as dangerous areas when I start my trading. So on the daily chart, we won't see any gaps. So we swap to the 4-hour and 3-month. Again, with loanDepot, it makes limited sense to go in that time frame, but yeah, in general. So gaps tend to happen during overnight sessions from other regions, so Europe or Asia. And at least from my point of view and also from experience, gaps tend to get filled. So we retail traders rarely move a price, except maybe some small low float stocks with very limited average volume. The institutions, hedge funds, big investors move the price of a stock. And when during an overnight session or other circumstances, a gap opens inside a chart, usually some capital of these big players are trapped in this area. Whether these are bulls or bears, it is not important, but here are trapped orders with money. from the big institutions, and they can wait to until this capital gets freed, or will get freed. And so usually these gaps tend to be revisited in the future, so the capital can be freed. It's not always the case, but yeah, nearly always. Yeah. It's more obvious in an index chart like SPY, like NASDAQ, but also in normal stock charts. So I would suggest that these two gaps will be revisited in the near future to free the capital that it's trapped there. Let's continue. Here, so for gaps and later for gaps and for the lines, I use the magnetic function because it's very easy to fill these gaps. Yeah, that should be fine. There are, of course, bigger ones here from the IPO, but for our next price actions in that price area, we only need these. So if you are a bit more from the risk perspective, more welcoming, you can also set your price target in that area. So now we have the lines established, we have possible gaps. Sorry about the noise. I'm in Zurich at the moment, and the working day starts. I hope you can understand me. So, supply and demand zones. So it's again very easy with loanDepot, with that chart. In general, above the price action or above the chart are the supply zones, and below are the general demand zones. With a more long time chart, you will see more supply and demand zones inside the chart for shorter term trades. But here we can stay on the bigger picture. Obviously, this you need to uncheck the magnetic function. So this would be a possible supply area from blue. You see that the price action tested this area or this zone numerous times and dropped below. So this should be, for now at least, the price around $23 price where most traders are fine with. You could even argue maybe that it started already here, so it could be closer. Yeah, let's keep it that way. So from 2180 until 2223 should be our general supply zone. Demand zone, yeah, I would say it's right here. Excuse me. Yeah, right inside our support and stop loss zone. And yeah, you can go on lower time frame. Maybe our gap here is above or inside a possible supply zone. So with these zones, you can expect the price action will revisit these zones again, and then you can plan and start short position here or a long position here. Again, with a more mature chart, you will see a lot of shorter demand and supply zones inside the bigger chart, where you can set up smaller swing trades. But then I would, yeah, these two main areas would it be for me in that case. Yeah, trading ideas. As said, I would if you want to trade loanDepot, I would thinking about starting a position this week. Maybe I would wait if these sell-off after the dividend has stopped, or maybe it revisits the $12 position again. But from there, I assume it will be an uptrend, a start of an uptrend. Maybe it is again held down by the EMR 20 or 50, but I doubt that it will go below $12. Okay, I think that's it from my side. If I find time later, I will visit your results and attempts of charting and try to give you. We'll try to give you individual feedback, and I hope you could understand me, and please excuse possible bad English. And if you found this helpful, we can continue with the education sessions. If you have questions, feel free to write it in the Discord. And that's it. Besides possible divergence, but I don't see any. Nope. We have a possible bullish crossover on the MACD, but no divergence, no divergence, no divergence. Nope. So possible bullish crossover here, that would indicate a possible start of an uptrend as well. But that should be it. Okay. Thank you. Bye-bye.